Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and we are here on Friday, January 24th, 2020 with a Forex market analysis breakdown for you. We're going to see how the markets are ending up the week and see how they're potentially setting up for the following week as well. So we're going to pull up our disclaimer right now just to remind you that this video is for illustrative purposes only. And with that, we will go to our live action screen here where we are at the www.forex-trading-unlocked.com website, and from the navigation bar you can see we already have clicked on the workstation page. We're going to skip past economic numbers. The stock market is up, the European markets are shutting down, Asia is done for the day, and the dollar index had a nice little lift to the upside, piercing higher move highs, and as you can see, the market has been trading away from the downward sloping trend line, putting this market into neutral, as well as the rally from a few sessions ago and the sustained trading over the past few days now has taken this dollar index out of this buy signal from the reverse head and shoulders. As you can see over here, there's a shoulder. We had the bottom that was set at the end of the 2019, which is our head, and then we also have our shoulder over here that was from last week. And then as of yesterday, we were pressing key upside resistance here at this last lower swing high. And now with today's trading, the dollar index has broken out above to the upside slightly, and that is now targeting this upper 98,720 extreme. Now this market has been in a bear market. Obviously, in the month of January, the dollar has gained strength. In the midst of an impeachment trial and all kinds of other things, the dollar index is still finding momentum to the upside today. So we're going to look at what it's doing to the other the currencies versus the dollar and see what trends are intact, which trends are diverging. There is an interesting thing that is going on in certain currencies, so we will see how that is manifesting and how the end of the week is shaping out. So real quick, let's look at the Euro US dollar. Okay, the Euro US dollar here, this market is still falling apart. As you can see today, it's making newer move lows, and the dollar index obviously is strong, and the question is the dollar index going to run out of gas, or is it just the beginning of the next wave higher? Well, for the dollar, it's really tough. There's a lot going on. For the euro, though, we do have some problems. We have what's going on in Italy, and that is starting to weigh on the European Union. You also have Brexit, which is also going to occur on January the 31st. So this is happening. There is no longer a question whether Brexit is or is not going to occur. It is happening January 31st. Originally, we thought that this market would go sideways into this event, but because of the problem with the Italian debt market and some other issues with the Italian economy, that's going to weigh on the EU no matter what happens with Brexit, or how Brexit's going to manifest once the date passes. So that's going to be really bearish for the euro, probably for the next few sessions, maybe even going into the next through the next month. This is dollar aside. This means this is euro weakness that's driving. It's a fundamental factor that's driving this momentum to the downside. The question is, how low is it going to go? Well, now we're looking at support targets. So we've already taken out the last higher swing low that kept the trend intact, at least the short-term trend intact, and now we're looking at the intermediate trend. So we're looking for a breakdown that is $09.79 area, which when you look at it really is not that far of a slide because the market's trading at 110.29. So you're looking at basically a 50 pip potential break still to test support, and this would be the area where I think you're going to have to find the defining line in the sand, if you will. If this euro is going to bounce, and if there truly is strength in the euro US dollar, the market most likely is going to stay above this 109.79 area and find some support and get at least a neutral to higher trade going into Brexit and into February. If the dollar index really is strong and these woes continue to hammer the EU, well then that's all bets are off, and then we may see a longer term trend where the euro may actually start to finally drive through that key support down at around $1.08 half. Remember that the euro, no matter what has happened to it over the past couple years especially, there is always support that seems at around $1.08.5. Now the question is, if we have such strength in the Swiss franc that is continuing to occur right now versus most currency crosses, if the Swiss strength continues to go into the next month, and especially versus the euro, we're going to take a look at that right now, just so you can get a bearing on what we're saying here. So we're going to use markets as our indicator. So as the euro US dollar is falling, look at what's going on here. The euro versus the Swiss is just getting pummeled. This market has not found any relief whatsoever. The Swiss is such a bull against it. And this also has to tell you something, that when it comes to the EU, what's going on with the fundamentals with Italy and Brexit aside, that the euro is starting to lose strength. So let's look at the euro versus the pound as well, to find out if there's any euro strength anywhere. So here we bottomed out, in the middle of December, found a nice rally, and we've been going sideways, and this is probably mostly because of Brexit. So let's put the timeline here. We're almost there. So this market, although bearish, it seems for the most part, it probably is going to get tighter and tighter into next week. I wouldn't expect much of a swing, but also look at here. The euro is weak versus the pound. So overall, we're looking at just how the Swiss is a raging bull against most currencies. The euro, let's go back to the euro US dollar. The euro is fundamentally weak right now. So this means it gives credence to the fact that right now the bears are probably driving this trade for sure in the short run. That's obvious. But the potential for them to get down to this 109.79 area over the next couple sessions is very, very probable. Doesn't mean that we can't get a bounce and get a big turn, but remember, the overall trend has been up since October, or neutral to higher, and I think that the last swing move high up here, when we finished out the year of 2019, that this may actually be the short-term high for a while. So the break that we've had in January looks pretty extreme if you look at the velocity here of the slide, but if you actually look at the ranges, the top here was just below 112.5. Let's see, it was 112.39, and now we're trading at 110.29. So we're literally only $2 lower than when we ended the year out. That's not a big move really for the euro US dollar. So overall, the actual velocity that this momentum has, it looks harsher than it is because it's so tight of a trade. There's not much really here. No matter what, whether you're on the right side or the wrong side, the potential for profit and loss hasn't been very much for the swing traders over the past couple months. But now we actually may be starting to see a true trend emerge even in the euro US dollar, because if the euro keeps on collapsing versus the pound and the Swiss, it stands to reason that even if the dollar is weak overall, even versus the pound and the Swiss, that it's not going to be versus the euro. So the euro right now, we're looking to see how this is manifesting into over the next couple of weeks, but I would be a very leery bull if you're out there. I would look for a real signal to buy first before you start trying to catch a falling knife here. And if you're a bear, I would say that right now you may not be selling into lows, and any rally I would think is going to be a selling opportunity. No matter what, since we made this high at the end of January, we came down, we made a low, we made a higher move low, then a lower move high, lower move low, lower move high. Now we're making lower move lows. So that is consistent with the basic fundamental for the technical trade, that we are going lower and we're going to continue to go lower. So it is a Friday. The markets are going to be ending in a few hours for the week. The question is, how far will they press this move? Don't be surprised. There might be a little profit-taking bounce in another couple hours, pull back a little slightly, but I wouldn't expect much. Or we may just stay hanging on the lows going into the end of the week. So we'll see how this manifests. There's still the impeachment trial that's going on in the U.S. It looks like this is going to drag on for quite some time, but it doesn't seem like the dollar is gaining any strength towards the euro US dollar, that's for sure. So now let's look at the British pound US dollar, which saw a little bit of relief yesterday. And this day, it wasn't much, but it was holding up, and then it settled slightly lower. So it had been rallying for a few days, but still had been riding underneath the highs. Today it's lower, but as you see, it made a higher move high before it fell apart. So today we have some dollar strength that obviously is present in the marketplace. The question is, with the British pound, we have the Brexit, which is going to be next week, the first phase for sure. The UK is leaving the EU. And of course, that means that their concern as far as what's going on with Italy and whatever is only going to be because they're in the same trade zone, but no longer affiliated to them politically, which I think that the UK must be very happy with going with the fact that they have 1 week to go to leave the EU and leave that mess behind. So there's not that they're out of the woods yet; they still have their own problems, but I think that if the EU has problems with Italy and now they have a potential trade war with the United States, what does that mean? It's going to be probably 6 months to a year where the euro is going to be in a world of pain, and the last thing they need to do is be fighting a war on two fronts. So I think that the trade war with the United States may be the best thing that just happened to the UK in this whole Brexit situation. We'll see how it manifests, but you saw what was going on with the euro pound, that the euro is weak versus the pound. Now, the pound doesn't necessarily have a lot of strength, but it has been in a bull market for quite some time, and now with what's going on with the euro, that just helps the other biggest currency in the world next to the US dollar. So US dollar Swiss, this is a totally different ball of wax. Right now, this isn't a corrective move higher. The US dollar is strong. It's strong versus most currencies. And you saw how the Swiss is strong versus the euro and also the pound. So the question is, what's going on with the dollar? This most likely is just a temporary correction. The Swiss is a bull. Remember, we got the British pound, CHF. Let's look at this. British pound, CHF. This looks kind of like the British pound US dollar chart, doesn't it? Very, very similar. It's almost identical to it. But then we have the euro Swiss, which, remember, like we saw, this is all the way down. It's trending lower. So back to US dollar Swiss franc. Oops. CHF. There we go. So overall, the Swiss is a bull. Short term with the dollar, because there's a bunch of dollar strength, we're looking for this correction to subside. I think you may take out this last lower swing move high, but even if we take out this level here, I would look for this market to run out of gas around 98.5 extreme. So right now it had made a low, it made a nice lower move high. So still, this market right now, even though it's positive today, unless it crosses this 97.29 area, I wouldn't get too overzealous with it. And then even it has to still cross and rally above this 97.62 level before we even really start to get to the idea that we're not bottoming, but that we would be extending the upside correction. Remember that this market has been breaking since the first of the year, and while the dollar has been rallying against all these other currencies pretty much since the first of the year, look at this. It's choppy and sloppy versus the Swiss, and overall, let's see, this is the 31st. The market settled at 96.71. The market is trading right now at 97.11. So that you're 40 pips higher on the year. That's not much considering the gain the dollar has had versus the other currency crosses. Now let's look at the US dollar Canada. This had a nice little breakout to the upside the other day. Like a balloon underwater, it took out this sideways trading and made this higher move high. Overall, this has been a creeping bear, just slowly decaying. So, and it's had nice upside corrections. So the question is here, we made this low, we made a higher or lower move high. Higher move low. Now we've made a higher move high. That's indicative at least of a short-term bull, fundamentally on a technical viewpoint. So we have to go with that right now you're probably in a buying break situation. This goes with the current dollar rally. The dollar seems to be pressing itself, and I think that because you have the agreements with the U.S. and China on their trade war, and now you had an ultimatum already put by the U.S. president to the EU, that this is going to press the dollar for a little bit. This is obviously a new conversation. It's coming up, and this is in the midst of an impeachment trial. So we have some fundamentals that are so mixed, the U.S. dollar, it doesn't make any sense. But right now, dollar strength seems to be prevailing, so the trend is your friend. I would use caution. It's not hard for the dollar to fall apart once again. Remember, there's a divergence in currencies going on. So the Swiss is the bull on the planet no matter what. It looks like the euro is becoming a fundamental bear, and that's the way it's going to happen because of the factors that are involved between Brexit, the new trade war, Italy, it's not going to take much more. Even positive numbers aren't going to be good for the euro, I think, for the next couple months. So we'll see what happens. It depends on how they start to deal with the U.S. and the potential trade war that goes on. And we will see how that manifests. A lot of news is going to come out over the weekend. So the Canada right now, I would say just use caution. If you get a failure from this last higher move low, this would definitely be where I would say you are back in a world of hurt in the US dollar Canadian trade. So, and this is, remember, the dollar index starts to turn. This will be one of the first markets that's going to make a run for support. So be very careful. I'll keep your stops tight if you're a bull. And if you're a bear, I'd be still a little leery right now. It might be a creeper, so you might have to wait a little bit. But for sure, if we get a slide below $1.30, 33, this puts us back on the bearish campaign, maintaining the overall downtrend. So be mindful of that for sure moving forward over the next couple weeks. Let's look at the US dollar, Japanese yen. This market this week has definitely been pulling back, but when you see how much it exploded to the upside to make these new highs, well, it's a little bit of a profit-taking move for sure, at least the way it started out, it seems. This is kind of your line in the sand at $1.0956 here. The market's trading a little bit below it. I think that this is where you've had a lot of, grinding against resistance. Now it's become support. Even though it's below it, it seems like it's having a tough time with trying to get any momentum. We can take out the low of yesterday. So we're lower on the day, but we haven't taken out the low of yesterday. So at least for today's trade, I would key off of yesterday's low. Any failure from there definitely confirms momentum to the downside. As far as what's the extent of this correction here, no matter what, this market's been in a sideways trade basically for a while. So as long as the market's above 108.48 here, I think you're going to still have a good chance at holding up. Only below there, I think, do you start to get bearish, So we'll see. So it could be a range trade for a little while developing as it comes off these higher move highs. No matter what, this market is an overall sideways to higher trade. It's been a creeping bull. And right now, if you look at where we've been here since the middle of October, this bottom end of the range at $1.0848 up to $1.0956. So basically just over $1 in the US dollar yen. The range has been just choppy around and swinging around in this area. So I guess right now you're looking to buy into the lower end of this extreme, and while selling into this, I'd be very careful, because as long as we keep making higher move lows and higher move highs, that means the trend is higher. So be very cautious trying to sell into new lows. Wait for definitely a good confirmation. And here's the other thing, is that even the dollar index, no matter what, if the dollar has been a bear or a bull, the dollar is a bull versus the yen. And it seems like it's maintaining itself, so I would be very cautious about trying to trade against that trend. It's a slow grind, but even if the dollar is falling against other currencies, this is one that it doesn't seem that it's going to. And now the interesting thing is the dollar index is going to be hard to read, because if the pound goes sideways for the next week especially, that's one of the major currencies that can make it move. So it's going to be up to the lesser currency crosses to drive the index. And as long as the US dollar is falling against the yen, it's going to be pretty quiet, and it's going to be hard to gauge the dollar index. But if the euro falls apart versus the dollar, and also the yen starts to continue to fall apart against the dollar, or the dollar falls apart against the yen, then you might see, like I said, it's going to be a choppy trade, but you're going to start to see a divergence of currencies. And this is what's going to be interesting, because for the most part, all the currencies have been trading one way versus the dollar. And where it was the broad market of Forex currencies was rallying and the dollar was falling. However, not so with the US dollar yen, just like we have the Swiss. So we know right now that the yen is a bear, the Swiss is a bull, and the euro is fundamentally becoming a bear. So we're starting to have, with the euro becoming a bear, a divergence in major currency crosses. So if that gets confirmed, we've been using the dollar index as a guide that's been very helpful going into the end of the year and the beginning of 2020. The dollar index may start to become a mixed basket of goods, where it's going to get very hard to use that as an indicator for a broad basis of moves, especially turning points, because the currencies are not going to be in sync. They're going to start to be diverging from each other, which sets up a lot of potential swing trades. This is going to be good for all Forex traders, all options traders, and futures traders. Over the next few months, we are looking at having some wild swings, and definitely some very good new trends, meaning that the Swiss is going to be a bull, so you look to buy dips versus any currency. The euro, as you can see, is definitely becoming a bear versus the pound, the Swiss, and obviously the dollar. It's starting to set up like that way. So we'll see how this goes. It's going to be an interesting trade as it starts to move into the 2020 year, as we're knocking down the first month. Now let's see the Australian dollar, US dollar here. This one has been a continuous bear this month. It continues to pound new lows, and especially with dollar strength, I think it's just a matter of time where it's going to keep on easing lower. Now I think it's exhausted most of the move, but we continue to make lower move lows, lower move highs. The trend is lower, so that's the way we're going to look at the swing trades for this market for a while. Until then, there's no fundamental reason to get long the Australian dollar, especially because of the wildfires. I think they have a lot of fundamentals that are going to be holding them back and restricting them, at least for a little while. So let's look at the New Zealand dollar, US dollar real quick and see what that's doing. This market has been in a correction for a whole month, just like most currencies have been versus the dollar, but it looks like the last couple sessions it's starting to find a base. It's having trouble selling off, and this is the market where even when the dollar was a raging bull for the most part since October, the New Zealand dollar didn't care. It was a bull against the dollar no matter what. This month it's been in sync with a lot of the other currencies, falling back against the dollar, as January has been a bull for the US dollar and a bear for most other currencies. But this is a correction right now. The overall trend is higher, and it looks like it's starting to find a nice base. And if this trend is intact, then we're going to be looking at seeing the New Zealand dollar go make a run for new highs back up at the 67.5 area. So we'll see how that manifests over the next couple of weeks, but definitely start to look for some bullish opportunities. And now here we have the US dollar Mexican peso that seems to have made a short-term bottom here. We have a nice little breakout that's going on. We made this low. We had a nice little buy signal surge here the second day, and it looked like it was coming back to where this median range was, and then it looked like we were going to sell off. Bears tried to get a hold of this trade, but it didn't happen, and now over the past two sessions, boom, we have made higher move highs. Now the way this is manifested over the past few sessions, if you look at it in a little bigger sense here, we made this short little almost doji bottom here, this little spindle, this little candle down there. Then we had this really nice big rally that had absorbed almost the whole day of this last big spike lower as we started to make a bottom. So there was our last swing low. Then we made a lower move high. Then the market retreated on this red day 2 sessions back, as you can see, and that set a higher move low, and since then we have rallied to take out that swing high from a few sessions ago, and I'll put a horizontal ray. If you look at this high from this first day off of the low, this is our directional bias. Anything below here, we're back grinding support, looking to hammer new lows, but right now I think we're in a short-term corrective phase. This is a nice bullish little signal here that we're going to at least trade back up into this median range up here around 19 pesos to the dollar. So it looks like we still have a nice little move to the upside and a little follow through to go yet. Then we're going to look at the US dollar, Turkish lira real quick. This market has been also a nice raging bull for the dollar. Some of our lesser currency crosses are what is holding up and propping up the dollar, especially with what's going on in the Middle East. It seems like this bull is going to maintain itself. Now it's hovering right below these lows. Recently, a week and a half ago, we set a higher move low. The trend is your friend. It looks like right now we're looking to make a play for this high up here. If we do take this out, I would say this is going to add more fuel to the fire for the US dollar index. And that's where you're going to have to look for your strength in the dollar. Is look at how it's panning out against some of your lesser currency crosses. That's going to give you probably your better direction for where the dollar index is going, because the pound, especially for the next week and a half, is most likely going to be mixed. And then you have a couple other currencies such as your euro that we don't know for sure. It's not confirmed a fundamental bear yet, but within the last week or so, a lot of stuff has manifested that can only really, from a fundamental aspect, have traders looking at this as a sell for the euro US dollar. So since we talked about that, we're going to, oops, there's our alarm to let us know that we're winding down the show. Sorry about that. So the euro US dollar is now going to be our last market that we take a look at once again. So as we have gotten through this video. We've come off the lows a little bit, and this is definitely, once again, the market you want to key off of. Remember, pay attention to what's going on with the Italian government, with their debt market, and how the EU is handling that. Pay attention also to the new headlines, not necessarily the headlines, but what is actually happening and they're doing between the U.S. and the EU when it comes to the new trade war, the new tariff agreements that are definitely going to be imposed upon the EU. One way or another, something's going to happen. So that is going to cause a shakeup. Be leery of that. So it's going to be a dollar brawl, I think, going into 2020. It's all emerging. We'll see what happens over the next couple of weeks, but right now it's having all the earmarks of a big prize fight going on starting pretty soon when it comes to the US dollar. So we'll see how this manifests. It's Friday. Use caution. The markets are winding down. Volume will be probably quieting down now. All the numbers are out, and as you can see, the markets, the euro US dollar has come off of its lows. I wouldn't expect much to happen for the rest of the session. Now here's the one thing is, should we get a creeping rally the rest of the day that pulls this market back? This market's been trying to find support. The euro has been hard to beat down historically over the past couple years. Just because I'm being fundamentally very bearish and pointing out these signals doesn't mean that the market's going to break. These are just things that are definitely in focus and will fundamentally have an issue that will weigh heavily on the euro. So that's why we've been pointing this out. You want to be aware of it. Technically right now we've already hit our targets to the downside. If the trend, if the bulls that really do have control, if this is a sideways to higher trade, then the euro US dollar should be bottoming right now and finding support before and make a run for the highs again, no matter what. But we have a lot of fundamentals right now that are gearing up, that are going against the technicals. So technically we're looking to turn this market around. It's very bullish, but fundamentally we are at a tug of war right now. So we got a boxing match going on. We'll see what happens. It's Friday. I wouldn't take too much credence on what's going to happen. I'd wait for the weekend to come through, see what happens on Sunday, and get a fresh perspective and start the week off then. So if you're a bear and you've already made your money, now's a good time to take your profits. And if you're trying to catch a falling knife right now and you're a bull, I think you're going to end your week on a sour note. So for all it's worth, I would use caution when it comes to that. So remember the trades that we looked at. Please like, follow, and share us on our social media outlets, on LinkedIn and on YouTube and on other venues. And always check us out at www.forex-trading-unlocked.com, as well as on our YouTube channel. Please subscribe, and that way you can get our videos as they stream live and as we upload lessons and other useful video webinars for you out there. So with that, you have a good weekend, and we look forward to being back next week.